Top of the morning, top of the morning. Back at it again with another one. It's super early this side. It's like almost 5, and I'm about to go to work, but I just had to quickly get this out. I had a bit of a messy weekend. Didn't plan it to the best of my ability, but I'm still gonna get the video out regardless. Consistency is the tone of the month, and we can't falter from that. So, NFP killed it, of course. This is the setup. Um, If you've been following the setup so far for April, it's going to look quite familiar to the other stuff we've taken, but higher time frame context, 1 hour imbalance, we made a low, price traded up into the imbalance, and then began to sell off to the downside. Our draw was that monthly order block, but we'll take a look at Nasdaq just now, and we'll see where it's currently sitting at. Um, Moving on to the 5 minute, as you can see, of course, price did its thing. This was probably as this candle was being created, it broke through. Um, the imbalance pushed down further, came back up, and then began to make its way down. For me, this in 5 minute inversion fair value gap, that's what informed our entry. So you could see that this gray box with the red, that previously bullish imbalance turned bearish imbalance, was offering support, and then we broke through and closed strongly through it and under that other low there. That's when I was like, okay, we're now bearish, as well as taking into account the overall trend that NAS has been moving in. It just made sense to take that direction. So as it retested that zone there, that's where our pending order got triggered in. Okay, I didn't use a pending order in this case. I used a market execution, but got in, went low with it, took out that low, and ultimately took us out at our target. And of course, the T's and C's receipts. We've got that screenshot from the MT5, and you can see it was a lovely trading day. Absolutely lovely. Um, Good, of course, the fact that the protocol came through for us. And I hope that you yourself could see that, okay, especially when you compare this week's one or this month's NFP week with with March, February, etc., 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 you yourself will begin to see that no, that week is very navigatable as long as you have rules that you stick by and you just consistently follow through with them. Consistent actions, of course, lead to consistent results, and case in point here, as you can see. So that was the case with NFP. Oh yeah, if you're not following us, by the way, be sure to check us out. Got it on private for now, but we're accepting people to come through. There's no paid walls, but for this stage or this phase in the journey, we just need to close off, especially this channel, and just let people in who have good intentions, good energy, that type of a thing. So it's like a personal diary where I post stuff. If you're interested, of course, go through for it. But I also just want to talk about the Thursday. Since I was tape reading, I wasn't really participating, but it was quite clean. As per the protocol, we do not trade the Thursday or the day before NFP. Just part of the rules, really, not being involved the day before a big three news drive event. So the day before CPI, day before FOMC, I personally tend not to participate. But you're gonna do what you're gonna do. I'm just sharing what I do, of course. So now Thursday, similar type of setup, low key. If you can notice the pattern, I'm sure you see it. But then now we had this big sell-off imbalance or liquidity where it opened up. We filled that up. You can see we had a high, took out that buy side liquidity above that, sold off, closed below the low, and opened a fair value gap. Closed, sold off even more. Low key, imagine before this candle was produced, this low key like relative equal lows. So people would have their sell stops or stop loss orders under there. Price moves up, taps into that internal range of liquidity or the fair value gap, and then proceeds to go forth to attack external range liquidity. So for my end, all of my setups, the pattern is I look for internal range liquidity, so a fair value gap inside a price run, and then I enter there and look to exit at the extreme end of that price swing or run, which is the external range. So I terminate my trade. So I didn't take this one, but if I did, this would have been the logic. 1 hour fair value gap opened up after we took out buy side liquidity, closed below a low, and retraced back into that area, and then tapped into it and then sold off. You can see on the 5 minute how it would look like. Um, it would come down, go down from there, open up that small area that lines up with this order block also. So it would come back, hit that. My stop loss would be at the high of this. If I have the capital, I'd put it perhaps above there or above this. But in this case, we don't have that much, or we're just trying to keep the stop loss below 80 points really. So I had the stop loss, so I would have placed it above there, entry there, and then of course a 2 hour target, or just target that sell side liquidity pool there. In this case, it gave us a 2 to 1, I mean a 2.11 risk reward ratio, which means if you risk 1,000, you're getting 2,000 and then some out. Should the trade be successful, of course. So quite nice to see for the Thursday as well. And yeah, be sure to give us a follow if you want to see more. Account is private, but of course we are letting people in 100%. We just need good energy, of course. And that's what happened on Friday and Thursday. I quickly want to go on to Forex Factory. Just want us to look at how the news came out, what it was looking like, etc., etc. So I'm going to move back. It's 2024. Let's see, April. It was the 4th when the NFP news came out. So the news, we were expecting or forecasting 137K, but it came out at 228K. Unemployment rate was expected to be at 4.1%, but it came out at 4.2%. And then your average hourly earnings, it was forecasted at 0.3%. It did come out at 0.3%. And then we also had chats from Fed Chair Powell speaking. So seeing that, it's a bit of a juxtaposition. You'd see the high numbers, then expect, Nasdaq to pump, but that's not the case. I just want to go back to what it's currently at now. So this is the monthly chart. We pushed all the way down, all the way down. I just want to quickly open up this, go to my media. There was a chart that I put out on the 30th, which just showed the levels of these two. You can see here on the 30th what it was at, right? So we're looking at 19361. We had obviously levels at 19071 and 18057 that we were looking at for NQ, of course. So that's the comparison of what it was like on the 30th of last month, so 30th of March. That's how we're looking at, right? ES was at 5602, NQ was at 19361. When you look at it today, Nasdaq is at 16880. Ridiculous, right? We're hovering or looking at maybe hitting somewhere there, but we pushed way further past that. We hit that monthly order block. We've That was on the Friday, right? Let me go to the daily so we can look at the action. Friday we hit that order block, and then Sunday we gapped down, went all the way down to 16,450, and then now we're just back in that zone there. So very bearish, as you can see, very bearish. Once you get past this, the next logical level would maybe be that imbalance there on the daily, maybe this level here, 16271, but ultimately that's sell side at 15608, let's call it. That could be where we could get off to. So quite ridiculous sell off, really, quite shocking, quite scary for people who are obviously have certain investments in this. You look at the S&P, also went all the way down. There was a monthly imbalance that I was watching for the S&P, and would you look at that, we so happened to go down and fill it, but also went way past that level that we were watching earlier on. So just interesting to note, very interesting to note. We don't know what this week will have for us, but let's see what's going on. Let's plan out our week now. Bit of a long video, but you know, um, I hope the value is there. And of course, if you're following, you know exactly where we're going, and that's consistency. So this is the situation with US news drops this week. We have nothing on Monday, nothing on Tuesday. So I personally will just be tape reading. I'll just forward to test and see how price reacts within certain macros for my own study. But holding any risk or putting risk on the table, that is not something I'll be doing for these first 2 days. Wednesday, the day before CPI, we have FOMC minutes, so just be a bit careful participating the day before a big three news driver event. Oh, excuse me, hiccups. That's quite early. Pardon me. Moving on to Thursday, we have CPI, big fixture. We also have PPI numbers dropping on Friday. So for this week, on the later half of the week, that's when we can expect volatility. But of course, Monday and Tuesday, price can do something. But just, I'm not saying don't participate or participate. I'm just saying, me personally, I'll just really be tape reading. That's about that. And then look to take advantage of CPI and core PPI during the later part of the week. I personally like CPI days where we don't have Fed Chair Powell speaking afterwards, but also CPI is one of those extremely volatile events that you just need to be careful for. I haven't yet mastered CPI as well as I have NFP, but I'm on the way to get there. On the way to get there. So on my side, that's that for today, and the idea moving forth for the week. Bias wise, currently I'm bearish unless something happens that is particularly convincing. Let me just see the yeah, even YM, we hit that monthly imbalance on that chart. There is sell side liquidity there, so if Dow is still drawing down, we could perhaps reach to that, but we'll see. We'll see. So far, yeah, we bearish, man. Looking kind of bearish so far, but yeah, let's have a good week. New week, new goals. Thank God for the skill, and I'll tap in with everyone later. Stay safe.